On today's World Insight, China pivots exports to the domestic market with the support of Chinese e-commerce giants and large supermarket chains. So how big is the local market potential? Boost in Chinese consumer demand?
Hello and welcome to World Insight with me, Tian Wei. As U.S. tariffs disrupt world trade, leading Chinese internet groups have gone on multi-billion-dollar initiatives to help traditional exporters switch to domestic sales. JD.com pledged to buy at least $27 billion worth of goods from the country's exporters over the next year to help them sell products domestically. Alibaba's supermarket chain, Freshippo, popularly known as Hema, also said it had created special green channels for export suppliers to sell their products on its shelves. Pinduoduo looks to invest $13.7 billion to help its sellers pivot and upgrade. So how could all these strategies help exporters cope with tall trade hurdles and tap into the domestic market's potential? For deeper insights, let's loop in our panelists. Joining us in Singapore, Amitabh Palit, Senior Research Fellow and Research Lead with the Institute of South Asian Studies, National University of Singapore. In Beijing, Li Yong, Chief Researcher at DNC Think Tank. Also in Beijing, Annie Mok, Senior Research Fellow at the Center for China and Globalization. Gentlemen, thank you so much for joining us. And I want to start by asking Mr. Li, since you have been following international trade for decades, tell us more about what does that mean, these platforms, e-commerce platforms, volunteer to buy from China's exporters and therefore to expand the domestic market. How will that work and how well will that work?
The e-commerce platform represents the latest marketing platform and together with the technology. And they can have the kind of a market reach that traditional channels of marketing cannot. Therefore, the e-commerce platforms are playing a very important role, and they volunteer to help them, and because their help can produce immediate effect. And if you look at the initial result, take JD, for example. One toy company went on the platform, and just within days, they emptied 20 million RMB worth of inventory. So that is an example of the advantages that e-commerce platforms have than the traditional channels of marketing and sales and marketing.
But what does that mean for the internal competition? Since there's already quite some competition among those who are competing in the internal market. And now we see exporters are turning their head and say, let's work on the domestic market.
There will be a certain level of competition, but most important of all, the products being produced by the exporters are up to international standards. And they can be a force of complementarity in terms of the market offerings. And of course, the competition will also, I think, will stimulate the upgrading of the domestic companies or the domestic manufacturing, because, they need to catch up in terms of quality, in terms of standards. Those, I think, will be, the interactions between the exporter, the previously exported or oriented factories or companies, and the now domestically focused companies. I think they are mutually promoting.
One of the things we have learned is that people are looking at China as a big potential. They're also looking at the Chinese market, while at the same time China is willing to open its market to international exporters. But at the same time, we see Chinese exporters earlier served the U.S. market, now are turning to the domestic market. So you can see the competition within the Chinese market is going to be tremendous. So how other exporters are going to make sure they can be competitive at all for the Chinese market?
There are two things to be looked at here. The first is, as you very rightly mentioned, China is being looked at as a country which can step up a lot of efforts as a big consumer at this point in time. Because with reciprocal tariffs having come onto a lot of countries for the United States market, there will be a trade diversion. And in order to absorb those exports, China clearly is one of those countries with a population base, a middle-class population base of around 400 million plus, which can offer a lot of opportunities for competitive exports.
Yeah.
But the other side of the situation is that China also is producing at fairly high capacity. And for its own production, there are new tariffs that have come for the United States market. So these products also need to find an outlet. Now, whether they will go into the domestic market or they will go into the regional market outside of China is a big question. I think that is something which will depend upon the particular category of the product and the item. I think it's going to be a division. So some products will try to move more towards the regional markets, perhaps in Southeast Asia, where they might find the opportunities of being consumed much more. And let us not forget that China has free trade agreements with a lot of countries in the region. So, for example, there is a free trade agreement between China and ASEAN. China and Southeast Asia are also part of the Regional Comprehensive Economic Program, the RCEP. So there is a preferential market access that exists between China and Southeast Asia.
I just came back from a trip earlier from Malaysia. There I interviewed several important ministers from the current administration in Malaysia. And here is one of them, Malaysia's Minister of Investment, Trade and Industry, Tengku Zafrul Aziz. And he's sharing his thoughts on behalf of his people on the issue of trade.
Well, we welcome these policies. They will definitely help mitigate some of the potential impact, and the concerns have already been raised, and this is definitely a move in the right direction. I think it's even a proactive move because the concern, not just that there will be flooding of products from China because they can't access US market, but also you must remember that we are all an open economy, so there'll be exporters from, let's say, Indonesia or Vietnam or even Malaysia who may now have to fight exports from China to the third market, right? So this will help not just the direct but also the indirect impact. So this, I think, is good and positive, and we should work closer with China.
We have seen the latest number coming out of the IMF spring and the summer meeting. We understand, according to the latest forecast, the global GDP growth is going to be down as a result of the tariff uncertainties. Meanwhile, that of the United States is also going to be down. Growth is expected to be 1.8% down compared to the same period last year. When the rest of the world is really not doing very well, what can China and economies in the region do in order to fend off these tsunami in a way?
I think that it's important to differentiate what's going on in the U.S. and its impact on global trade versus global trade in general. So I'll share a quick comment from Ajay Banga, who's currently the World Bank president and former president of MasterCard. And what he said was that in the last 20 years, trade has quadrupled. And an enormous share of that came from intra-regional trade, so trade within ASEAN, between ASEAN and China, within Africa. And so what this means is that, of course, we are witnessing tremendous uncertainty and volatility in global markets, whether that's stock markets, whether that's in international trade. But the silver lining here, I think, is the role that China is playing. And I would say briefly about what's going on with this effort to create greater domestic demand for traditional Chinese exporters. is that this is win-win from the platform's perspective, because of course they get to do something that is seen as patriotic, but it's also a very smart business as well, because China's dual circulation strategy of improving manufacturing, distribution, and consumption domestically not just is strengthening the domestic market, but actually anchors global demand, as we've heard from some of our other guests. So I think this is, again, a very turbulent period, but if we look underneath the turmoil, I think the silver lining is that globalization is alive and well. We are seeing greater intra-regional trade ex the United States, meaning excluding the United States. And frankly, I think the future is pretty bright for both global and Chinese investors when we look at what is happening with this. I would consider it not a tactical adjustment, but a major upgrade to China's growth model that this shift of Chinese exports to the domestic market represents.
Over the past years, China's exports to the rest of the world has been really changing, particularly since the pandemic. We see the supply chains and also the value chains of Chinese products. The majority of it is going much higher in terms of technological level and also in terms of its green identity as well as its tech identity. So how is this trend now we see both in the international trade interactions and also China's already upgrading of supply chains and exports correlates with one another?
No, Tianwei, I think it absolutely, this all correlates together and it is very synergistic. So we see manufacturing upgrade, as you say, not just moving up the value chain with things like electric vehicles, et cetera, but from a distribution perspective as well. So the Chinese platforms, JD, Alibaba, et cetera, are world-class in terms of their logistics, in terms of their ability to deliver to the consumer market. And one thing I think that it's very important to point out is the role of KOLs, or key opinion leaders, in China as part of distribution within the framework of dual circulation. So I'll give you a quick example, which I'm sure you guys all know about, but the audience may not, is Li Jiaqi, the so-called lipstick king, who sold in one single day 1.7 billion US dollars in product. And I think what this shows, again, is the potential of the Chinese market, the opportunities that a well-executed marketing distribution campaign can deliver, and the opportunities not just for Chinese manufacturers, but foreign manufacturers, whether they're in ASEAN, in Europe, or even the United States. So I think that, again, this is very synergistic, Tianwei, that this tighter, deliberate, strategic level linkage of manufacturing, distribution, and consumption within China as the one wheel of the dual circulation that is pulling in foreign investment, foreign products, and I would say foreign demand as well for Chinese goods.
China, in a way, be able to digest what is really going on right now and be able to upgrade its manufacturing continuously and produce and design, market products that consumers really want. Not just like a buying spree, that would not last. There has to be things that consumer really think is worthwhile and they desire for the longer term. How much thought has been put on that?
We have been talking about the switch from exporters to domestic market. In fact, we are talking about the integration of domestic trade and exports. That has been an idea being floated in the 80s and 90s last century and became part of the 5-year plan in 2020. And then, 2001 and 2003, before even, these tariff tensions happened, it has been a strategy of the economic planners to really develop this part of the economy. And the reason why we need that is that the interactions or the integration of domestic and exports are going to both contribute to the economic growth and upgrading the manufacturing level as such that it will have very strong supply chain domestically, and it will also have strong bond with the external market. So it is then a kind of a dual circulation, which is really based on the comparative advantage, the upgrading of domestic manufacturing, as a matter of fact, has made Chinese exports less replaceable.
When you see what is going on now with the tariff wars, apparently there is China, United States, China more in response to what the U.S. policy on tariff have been. But the other economies, what do you see might be the time frame for other economies to recognize as to how much change they really need to adjust to, particularly when it comes to the nature of the United States as attractive destination for products?
The Trump administration has been unpredictable in terms of its various policies, because it has announced tariffs and then it has put a pause. It has entered into bilateral negotiations with a large number of countries. It is not clear at the end of these negotiations what will be the eventual outcome, how much of the tariffs announced will be retained, whether there will be other tariffs. And let us not forget that in addition to the reciprocal tariffs that have been announced on more than 60 countries, there are tariffs which have been put under the Section 232 of the USTR Act, which are on specific products like steel and aluminium. And there might be more such tariffs that might be coming in. There could be countervailing measures, there could be anti-dumping duties. So as a result of all that, I don't really think that exporters and businesses are in a position to make even medium-term decisions. Long-term decisions are a very long shot, but even medium-term decisions are going to be very difficult to reach. One possibility is that once the current round of tariffs start getting modified, and there is every chance that they will, because many countries in Southeast Asia and other parts of the world have started negotiating bilaterally with the US, which was actually the US objective, that they should come to the negotiating table. Once these tariffs get sorted out, then maybe after 90 days from the time when the tariffs were paused, which was the 9th of April, counting 90 days from thereafter, a large number of the US trade partners will know what kind of tariffs are going to be facing them. How much of the announced tariffs will continue, how much of them will not continue. So that might provide a short sense of certainty to some businesses, but that will still not be enough for supply chains and logistic businesses to work out their movement plans, because the problem is that the expectations from US trade partners are not just with respect to tariffs. There are expectations in terms of other non-tariff market access barriers and their domestic policies, which they need to act on, including, several significant areas like agricultural products, government procurement markets, barriers to services trade, foreign exchange policies. So all these actually mean that for the US trade partners, the policy decision will not remain confined to trade. It will have to move into many other areas of macroeconomic policy.
And that makes the things much more complicated, especially for those economies that are not necessarily the largest in the world. That is why earlier a system like the World Trade Organization has been very much welcomed by most of the economies in the world. So the smaller economies do not have the bargaining power. And once the contract is being torn apart, it is very hard to bring the new contract in that will make most of the trading economies function as well, if not much less. So besides trade, what still China can do in order to make sure its economy grows well? We understand that Mr. Li not only working on trade, but also working on infrastructure building. Not the type of infrastructure building like building high rises, let's build more roads, but rather building things like water infrastructure in China, particularly in major cities across China. And in some of the other areas of public service, that's likely to take 5 to 10 years long, not necessarily just 1 year or one season. So how will those policies combined with the attractive markets of China be able to make sure the Chinese economy will function well under all the pressure test?
It's a really good question, and there's threefold implications. One is, how we're going to be coping with the uncertainties in the Trump administration's policies, which has been changing on a day-to-day basis, and that is going to be very difficult. But to deal with that, I think the second tier of the answer is that China should remain open and committed to the multilateral system, and remaining open is a commitment by China to the world. That China is going to provide opportunities, stability, certainty, predictability. And on the topic of the China's investment in infrastructure, I think that basically is the set policies, and that I think is not going to be affected by any external circumstances, and we are going to move on because those infrastructure projects have been planned for the benefit of the economic growth and for the health of the whole economy as well. And of course, there will be other infrastructure projects with the other countries, and I think if there have been any commitment, and those commitments will be kept.
Mr. Mark, your thoughts on this?
Well, I think a couple points. So first of all, China has been preparing for almost a decade for what is happening today in terms of the tariff attacks by the United States. Second, I think what many countries around the world are seeing through China's example of strategic composure under these unprecedented attacks, that staying strong, staying determined is vital. Now, of course, not every country has the scale of China, but I think what's important here is that the Trump administration started out wanting to attack a number of countries, China in particular, but also bend or even break the will of other countries so they would cooperate with the U.S. against China. And I think what China's example has shown for these countries, and look at the recent results with Japan, which were inconclusive, that I think what many countries are realizing, to quote Mao Zedong, that the U.S. in this regard might be a paper tiger. And the most important thing is to stand together. And again, imagine if countries like Japan, Korea, the European Union all said to the U.S., look, we are not going to be bullied. We want equitable treatment, and we are going to work with China to ensure that there is a prosperous global trading order with or without the United States. And we only need to look at Secretary of Treasury Scott Bessent's recent change in tone, and even President Trump's change in tone about China to see exactly how important China's, and again, I use the term strategic composure, is to not knuckle under, to not look to mollify the Trump administration, but to stick to its principles, to be resolute. And I think this example, again, is very, very important for the future of the global trading order.
Especially in Asia, we see Asia's economy has been much more so-called punished by tariffs. To you, Mr. Palit.
I think what we should be prepared for now is existing in an international order where the rules have become minimal because the global rules-based trade order is experiencing a pushback. A lot of disruptions are coming out of that because there was a system in place. Unfortunately, that system is not going to stay in place in its whole form. But I must also bring this out that if we take the United States just mathematically out of the global trade scenario, then there is almost 87% of global trade, which is non-US global trade.
Yeah.
And it is important for that trade to be run in a manner which is as purposeful and as rules-based as possible. I'm not talking about necessarily a global rules-based trade order without the US, but what I'm suggesting is that that is one very important part of the global trade where countries can think of collaborating with each other through either blocks or bilaterally, or maybe through other possible groups to ensure that it remains business as usual.
I want to thank all of you for joining us on this interesting discussion. I'm sure things are evolving as we speak. So much appreciated that you are sharing your insights. Thank you. And that's all the time we have for today. If you'd like to know more, search World Insight and check out our YouTube channel. Follow us on X and Facebook. I'm Tian Wei. On behalf of the team, thanks for being with us.